You are welcome. So we are trying to stream live this to YouTube. Okay, we are live right now. We are about to be live. We are about to be live on the YouTube. Okay, let's get some settings done so we can get a good okay. Hang on. We need to get this done. Okay. So you are welcome. I will share my screen right now. Thanks for joining me today. My name is Harlan, your Forex mentor. And then in this class today, I'm going to be giving everyone the opportunity to ask me a question in whatever market you have challenges in the Forex market. So it's a great opportunity meeting you guys. You're welcome. And then I really want to know if you guys can see my screen, if you can see the live Forex trading class starting now. And then if you can hear my voice, if the sound is clear and perfect, I need to know. So before we start the class, so I just need you to unmute your speaker, no, and the response, say hi, you can see my screen and then you can hear my voice. That's very, very, very essential before we continue this class today. At the bottom of your mobile device or your PC, there is a speaker icon right there. You can unmute that, or I can have you on speaker so you can respond to the class. You can respond if you can actually hear my voice. So Mr. Emmanuel, you are welcome. So I'm gonna unmute your speaker right now, Mr. Emmanuel, so you can actually can hear your voice and I can know if you can see my screen. So if you can hear my voice, and they see my screen, it means other students in the class as well can hear my voice and they can see my screen as well. So Mr. Emmanuel, you are welcome to the class. Your speaker is on, you can respond if you can see my screen and then if you can hear my voice, let me know. Okay, Mr. Emmanuel?
Okay, so I can see your screen and I can hear your voice as well.
Okay, good. I'm very happy you can see my screen and then you can hear my voice. You are welcome. And we won't waste much of our time since Mr. Manuel can actually see my screen and then hear my voice. It means other students as well can see my screen and then hear my voice. So I'm gonna need more confirmation from another student as well. So I'm gonna put Mr. John on. Okay, Mr. John's mic is not on. Okay, who is next on the list? Okay, Mr. Tima. Let's get a note from Mr. Tima. Mr. Tima, I will put on your mic as well so I can hear if you can actually hear my voice. So Mr. Tima, I'm gonna unmute your speaker right now so I can know if you can hear my voice and then if you can actually see the screen right here properly. Mr. Tima, the speaker is not on. You can try to unmute your speaker. Okay, your speaker is on right now. Mr. Tima, can you see my screen? Can you hear my voice perfectly right there? Your speaker is on, you can respond. Mr. Tima, you can respond. Your speaker is on. Okay, we need to start the class right now. Thank you guys. So I'm gonna get on the chat right now. So, okay. We are live on YouTube. You can as well visit us on YouTube. Actually, I'm gonna send this link for those who want to watch us on YouTube, so they can actually get access to us from YouTube. So let's try and get that to other students as well, so they can watch us live on YouTube. So let's see if that link is gonna actually work. So we post that. Okay, good. Okay, good. We can as well get that on their VIP members room for those who wanna actually watch us from YouTube, and then for those who wanna actually get to us from that is from Telegram. Okay, guys, thank you. So I'm gonna be back right now on the screen. So here on my screen, I have a lot of currency pairs. I've been monitoring. I have a lot of currency pairs. I have a lot of stocks as well, and then I have cryptocurrency right here. And there's a lot of stuff I want to discuss with you guys, but I always give you guys the opportunity to ask me a question in the market. If you have a particular question you want to discuss about the importance of this class, we could do hold this class. I do hold this class, this webinar class 3 times in a week. That is from Monday, Tuesday, Thursday, and the Saturday. That is 9 p.m. GMT +1. So you can convert that time to your own current time zone. So I'm gonna give the student opportunity to ask a question. Maybe it's something, a question or a topic you guys want us to trade in this class today before I proceed on. And so I'm gonna give you, if you have a question or you have a particular topic you want us to trade into this class, you can ask your question so we can both trade it together. So everyone, you can unmute your speaker and ask whatever question, whatever you want us to discuss in this class. If no one is giving a response, then I have to, go on with my own personal or topics I have for you guys in this class. So any questions from you guys, Mr. Emmanuel, Mr. Timan? And if you're watching from YouTube, you can as well type your question if you have a question. And if you are watching from Facebook as well, you can as well send your message so I can know. So if you have a question, so let me know. It's very important before I start the class based on my own topic. So Mr. Emmanuel, do you have a topic? Mr. John, Ms. Rachel, Tima, question? You have a question? You have a question?
Okay, so okay, so I just want to know how many confluences do you use in your trading?
Confluence? You mean confluence factors?
Yes, how many do you use normally?
Oh, I can't say there is a specific numbers of confluence factors, because in the market, no. Confluence factors can build ranging from 2, 3, 4, 5, 6, 7. It all depends on the currency pairs you are watching. It all depends on what you can figure out on your trading chart. But at least the minimum I love to use is 3 confluence factors. 3 confluence factors. That's the minimum. So I'm going to discuss about confluence factors for those who are new to the terminology or to the what is confluence factors. Confluence, when we say something is confluence, do not mind my writing. When you say something is confluence, it means number of actions, numbers of factors which you can find which supports your trading analysis or your trading decision. So let's say, for example, right now I'm gonna get this off on my chart right there. I'm gonna shoot this rod up. Okay, so I'm gonna put everyone speaker off so it doesn't constitute unwanted sounds to other students as well. So let's say, for example, right here, I am monitoring the currency pairs. Let's say, for example, I am monitoring, let's say I'm monitoring the Canadian. So let's say, for example, I am monitoring that is a USD paired against the Canadian dollar, USD paired against the Canadian dollar. And I want to buy, right? I want to buy from support, right? I want to buy from support. Before I can plan to buy from support, there are confluence factors which I must figure out on my trading chart. Number one, I want to figure out price is at the support, okay? And take note, each confluence factor right here, I'm going to be representing them with hash 1, hash 2, hash 3, okay? So it means action number one, I want to see price at a support, okay? Whereby hash factor 2, I want to see a bullish price action signal, okay? In conformity with my bullish bias, with my bullish interest. So some of the bullish price action signals you can look out for are your bullish engulfing bars, your bullish pin bar. This is an example of a bullish engulfing bar at a support. So this is a bullish engulfing bar, and then we have the bullish pin bar. The color of the head doesn't matter. It's possible you have something like this. The color of the head doesn't matter much, but what you just really to know is what this bar right here actually means, okay? So if you have this, it doesn't mean, and then this as well, it doesn't mean, okay? So, and there are also other bullish price actions you can look out for, but I love to look out for this kind of signals bar due to its high historical record on my trading records. They are consistent working price action signals. Bullish engulfing, the bullish engulfing bar. I believe you guys are familiar with all this bar formation right there, bullish engulfing bar and the bullish pin bar. So they work consistently. And then we also have the piercing. The piercing, whereby you have a bearish bar and then you have a bar closing that is above the middle of the what? Of the bearish bar. So let's say, for example, I have a bearish bar. This is a bearish bar. Okay. I believe you guys all know about bars formation. No, I believe I just want to explain this. We don't know the experience of the traders who are watching us. So I just want to explain this so that everyone can actually get the whole picture properly. So right here, I have a piercing, and then this is the middle of this bar right here. Here comes the middle. Okay, so for this bar to be a potential piercing bar, it has to close below above the midpoint of this bearish bar right there. So I just need to make sure this piercing right there close above the midpoint of this bearish bar right there. So this is a piercing. We have a lot of variations of bullish price action signal. So hash confluence factor number 2 is you must look out for a bullish signal. Bullish signal. Like I stated earlier, your bullish signal can be any of these. We have a lot of bullish signals kind of variations. If you don't know much about that, I have a course on that about the Japanese candlestick. So the third factor right here, look out for the trend. What is a trend? There are some time whereby you trade against the trend. It doesn't mean you won't make profits. And there are sometimes you trade accordingly to the direction of the trend, and then you still make loss. So it all depends on timing. Know what you are doing. Do the right thing at the right time, not the right thing at the wrong time. Okay? So you have to know this trend, direction of the trend. How strong, how weak is the trend? Those are the stuff we have to put into confluence factors. Okay, let's say maybe it's a weak trend, or a weak trend, or maybe a strong trend. You have to put that into your confluence factor as well. So let's say, for example, I am in a bullish rally, and then price makes a pullback to a certain level, which acted as a support right here. This level right here is a support right here, and the right here we got a support right here before price makes a rotation downward right here. So this zone right there is a previous historical support level. So for price to make a breakthrough right here and then come to retest right here, this region has a probability to convert this medium right there into a support. Okay, now you have to relate this to the overall trend. So you have to relate this. Is this trend right here a bearish trend, or is this trend right here a previous bullish trend? These are what you have to put into confluence factors. Okay? So you have to know the overall trend of your action. Action factor number 4, relate trend. That is trend. Trend. And then the next other factor I love to put in consideration is after a pullback in a trend. Actually, if you have been following me for a while right now, you guys should figure out I have a special indicator which I use, but actually I don't use the indicator to get into a trade. I use that indicator for dynamic support and dynamic resistance, and that is the 10 and 20 exponential moving average. I have a course on that. If you haven't watched the video, I have a course on that on my YouTube channel. You can go right here and figure out the video whereby I explain how I use the 10 and the 20 EMA for trading on my chart. That is the 10 and the 20 EMA. Okay. I use the 10 and 20 EMA for dynamic support and dynamic resistance. So let's say, for example, on a trend whereby I can figure out a bullish rally. Okay. Price makes a pullback right here. The overall trend right here is a bullish rally. Okay. And then I have my 10 and 20 EMA. The red is my 20 EMA. Why have we used this blue, maybe purple, for my 10 EMA? Okay, whereby this is the 20 EMA. So in a situation whereby I'm in a bullish rally and then we have the 10 EMA, crosses. Okay, I'm going to change this to blue, whereby I have the 10 EMA respecting right here, and then price carved what? A bullish pin bar. Let's, for example, we have a bullish pin bar right here at this zone right here. Okay, I'm gonna make that drawing right there so you guys can figure out how it forms right there. Let's, for example, I have this right here. You can see how these 10 and the 20 EMA are all supporting this right here as a dynamic support. As a dynamic support. If you don't understand this, I have a course on that. You can navigate through my YouTube channel. I have a video right there where I give you explanation how you can use the EMA as dynamic support. Okay, I use it to analyze a pullback in the market. It all depends on if sometimes, for example, right now you guys can figure out on my chart, I am trading raw price action right there. I'm trading raw price action on my chart. You can see on my chart, you can't see any indicator right there. I'm trading, sometimes I may prefer to trade raw price action. No, it all depends on what I want to see on my chart. So those are number examples of confluence factors you can put into consideration. And then time zone, we have to relate. A student of mine asked about time zone correlation, how to relate time zone to each other today. So let's say, for example, this trade right here, I can spot this on the 4-hour chart frame. I have to make sure this 4-hour is in conformity with my daily chart. It doesn't mean when you figure out a pullback on the lower time frame and the daily time frame is bullish, it doesn't mean it is guaranteed it's going to be a bullish trend. Like I stated earlier, there are some times whereby you trade in direction of the trend and then you still make loss. And there are some times you trade against the trend, you still make profit. It's all about timing. And then knowing what you want to do, knowing what you want. You have to know what you want in the market. You have to have a specific rules. Okay, so if I want to trade right here, I have to make sure I relate this to the daily time frame. I have to make sure my trading decision on the 4-hour chart is in relation to my daily time frame, because the higher time frame will control the lower time frame. In a situation whereby the daily time frame is in a bearish trend, and then I have a pullback on the 4-hour chart frame, it means that is a short-term trend. So it's a short-term trading. It's a trade within short period of time. can last for 4 or maybe within 24 hours, no, 4, 12 hours. So those are stuff you have to put into consideration. How strong is the trend? Okay. So those are the, and then again, you have to make sure a trade you want to take, how close is it to the next resistance level? And this is where money management comes in. These are the confidence factors you have to put into consideration. Let's say, for example, right here, I want to take a trade. I have a support right here. And then I have a, okay, I'm going to make this trend right there. Let's say, for example, I have a support right here. I have a resistance right here. And then I'm going to divide this screen into 2. Okay. And then there is another, I have a right here. And then I have right here. So let's start this right here as a chart of the British GBP USD. And then let's tag this as AUD USD. So price actually carve, let's say we have a bullish engulfing bar right here. And I want to take a trade from this region right here, this resistance level. Take note, there are some key levels on your chart. We have major resistance level, major key levels, major resistance or support level, and then we have minor resistance and support levels. So it all depends on how strong the key level is. Key levels on our chart can either be major or minor. I have a course on that as well. Can share, I think it's in the VIP members video. So if you're not right there in the VIP members, it's an opportunity for you to get in, check all those stuff right here. So we have a bullish engulfing bar right here. And then the next, if this resistance level right there is a major resistance level, if you want to buy right here and then you want to risk, your stop loss goes right here, and then your entry goes right here, and then this level right here is a major resistance level. And then take note, in the risk management analysis, it's advisable you take trade with a minimum of 2 risk reward ratio. When I say 2 risk reward ratio, it means if you are willing to risk like maybe $100, you are willing to have at least $200. Okay. So let's say, for example, maybe I run an account of $100 on an account. Okay. And then I want to make a 2 risk reward ratio trade right here. And then maybe on my account, I don't risk more than maybe 1% or maybe 0.5%. It means if I want to make an entry right here with 1% risk right here, my stop loss right here, it means if the market go against me right here, I'm gonna lose 1%, right? I'm gonna lose 1%. Okay, that's my stop loss. And if the market go in my favor, I'm gonna gain what? 2% right here. So this is where the money management analysis comes in, which must be in conformity with your confidence factors. After I've analyzed all other confidence factors and I can say they're in conformity, now what I need to relate is the next resistance or support. It all depends on the trend. Maybe you want to short, maybe you want to long. So if you want to buy right on this currency pair right now, and I want to risk 1% right there, so I have to analyze from this entry zone right here to the next resistance level right here, which is a strong major resistance level. It all depends on the time frame. The resistance and the support level on your lower time frame, like the 4-hour, you can't compare it to the resistance and the support levels you have on the daily and the weekly charts. Actually, I don't trade the lower time frame. I trade from 4-hour, daily, weekly, monthly charts. Okay, so if I should make an entry right here, whereby I want to risk from this zone right here, I want to risk 1% right here. So if price should get to this zone right here, price have high tendency to make a reversal, or price have high tendency to have a pullback, or price have high tendency to have difficulty to break through this level because it's a strong key resistance major level right here. It is strong major key level for resistance, as a resistance zone, as a ceiling. So price may have difficulty to break through right here, which means price can make a return, a U-turn downward. So it means for me to make 2% trade right here, the chances right here, it's very low. It's very, very, very low. Unlike the distance I have on the Australian against the USD right here. So let's say, for example, I have a trade on right here, and then right here I have a bullish engulfing bar. This is a bullish engulfing bar right here. Let's indicate this, that, okay, good. And the right here I have this right here. This is a bullish engulfing bar at a support. After I've analyzed all my confluence factors, no, maybe support, all these confluence factor, the trend, maybe it's a bullish no trend. And then I have the next major resistance right here. And then from right here, which will be my entry, and then right here, my stop loss. Maybe I want to risk 1%. It means if the trade goes against me right here, I lose 1%. And then you can see right here, from this zone right here, let's say, for example, from this entry to my stop loss is 50 pips. Okay, 50 pips. It means from this level right there is 50 pips. So from this range right there, it's going to be another 50 pips. Okay, which is one ratio right there. From right here again to this zone, this is another 50 pips. So I have total of 100 pips from my entry before price get to the resistance level. So at this one right there, I have higher chances to make profit because the obstruction, which may reverse my trend, my trading decision right there, the key level structure is far away from my entry. So the chances of executing profitable trade right there is much higher than we have right here. So these are examples of the confluence factors you have to put into your analysis. So let's check an example on our live chart right here. So let's say, for example, right here now, let's make check other currency pairs. Okay, let's make an example of a currency pair we took on the British pound sterling against the switch. Let's check we took a trade on the switch. I and the VIP members. Actually, we took a trade on the switch right here. The trade was being originated from 4-hour chart. Yeah. Okay. There's a 4-hour chart right now. So let's say, for example, right here now, actually, we took this trade from this region right here that we got price action right here. So let's analyze this. I'm gonna wipe this out right here. Let's get this right here. So get this off. So let's say, for example, we have our stop loss goes right here. We have the breakout of price right here. We have the rejection of price to this. I'm gonna zoom in right here so you guys can figure out the whole picture properly right here. Okay, I think this is good. Okay, I'm gonna put this on the wide screen. Okay, good, wide screen so you guys can figure out that properly. Actually, this is not my live account because the broker firm I use, they are not open on the trading view. So I have to use MetaTrader 4 for my live trading. So this is one of the accounts which I just use as a follow-up for my retrading live account. So I love to use the trading view because of it's easy, very flexible, very easy to flow up with. So on the right here, you can see we got right here, price made a rally from this zone right here. We can see the fluctuation of price right here. So price broke through this bearish narrow wedge right here. So after price made a breakout right here, we can see price made a retest. We had a retest right here. This was a retest right here, whereby this where we had our stop loss right now. You can see the stop loss right here. There is stop loss right here now. After the retest right here, you can see we had a swing low right here, the swing low right here. So price retested this after the first breakout. Price retested this low right here. Then it served as a what? As a rejection downward. After price was being reversed downward, price carved a what? A bullish engulfing bar. This is a bullish engulfing bar right here. A bullish engulfing bar right here. After that, we can see we have a swing low right here, a high swing right there. Now the rejection right there now have every probability to transform into what? A new swing high low, which is a signal of transformation to a bullish rally. After price made the retest right here, price made the retest downward, then price comes out next. Like this is the resistance right there. And then right here. So this is actually what happened right here. Price broke through. And then price comes back right. Price tried to break. That was a reversal of trend. and then price retested again, price broke it. Then we wait for what? A retest. Actually, right here on this chart right here, you can see I'm gonna clean all this off. Stop loss goes right here. This was the first retest of this thing low right here. Price returned down, made a pullback, then price broke. After price broke this key level structure right here, we looked out for it. This was the retest right here. You can see the lower shadow of this bar right here. This is a retest. Actually, the retest was being originated from the 1 hour chart frame. So I'm going to show you guys on the 1 hour chart frame. Actually, I don't trade the 1 hour for my analysis, but I use the 1 hour to get in early. So don't get me wrong. I use the 1 hour to get in early, whereby the 4 hour, daily, weekly, they are for my trading analysis. I don't analyze the trend, the market on 1 hour, but I use the 1 hour to get in early and then to trade my profits. Okay, so I'm gonna show you how the 1 hour, how I found the rejection bar on the 1 hour. This was the trade I sent to the VIP members. So if you are the VIP members, you should take this trade as well. So right here, okay, good. Where is it? Yeah. Okay, good. Right here. So after we can figure out right here, price broke through. Okay, let's zoom in a little bit so we can see the whole picture right here. Okay, good. You can see the swing low right here. Price made a retest of this swing low right here. That was a pullback right down. Price make the breakout. So let's zoom in now so we can figure out the bullish price action after the retest. You can see after price made the retest downward, price make the pull or breakout. You can see the bullish prayer right here, and then bears comes in to repress, to pull back the price downward. Then we add a bullish engulfing bar. The bullish engulfing bar serves as a retest of this key level. Take note, this level right here is a minor key level structure. So this rectangular box right here represents minor levels. Why these red lines, horizontal line, represent major. So any red line you figure out on my trading chart, any red horizontal line, they represent key level structures drawn from the higher time frame, that is the daily or the weekly. Whereby the rectangular box you can figure out right there, they are key level structures drawn from the 1 hour chart. So that is why I represented them with the rectangular box right there. They are minor key level structure. They are not as strong as the major key level structure right there. So I'm gonna clean up this up. Okay, we can see we had a bullish engulfing bar right there, and then we went long right here upward. So this is an example of how to analyze a trend in conformity. We can see right here we had a swing low right here, swing high low right here, swing high low right here, and then swing high low right here. You can see that. So we are trading according to the trend. Actually, we are out of this trade on a live trading account. We are out. We have taken our profit because this trade idea was being originated from the 4 hour chart frame. So we don't want to stay more than 4 hour charts. We don't want to stay more than 4 hours. If you should analyze this trend right here now, after the bar card right there, this was the first 1, 2, 3, 4. So we got in right here after the end of 4 hours. So this is why analysts emphasize on trading is all about timing. You have to time your movement. You have to time. You don't have to stay in the market longer. And there's some time you have to stay in the market for long. It all depends on the time frame you have generated your technical trading ideas. Right now, this trade was being generated from the 4 hour chart. So that is why we held this position for 4 hours period, and then we got in. We can see right now price is currently pulling downward. Actually, I am just trading this on the I'm planning the strategy right here. That's why I say I have to leave this trade for a while right now. Actually, this trade right here is based on a swing low stop loss. So it's gonna involve in a swing trading right here. So the next swing right here now should come at this level right here. That is the entry zone right here now. If the next swing low doesn't come in, there's probability this level right here can still reject price upward. So I'm looking out for this trend to turn into a swing trading. But based on the 4 hour chart frame, the best one to take your profit at this one right here or right here. But since price failed, there is a reduction in momentum, so that is it. So these are examples of the ways you can stack the odds in your favor when you trade. You have to know when you want to get in. Before you get into a trade, the first thing you have to think about is how much are you willing to risk? don't think about how much you want to make first. Don't think about profit first. Think about the risk. Think about the risk. This is what I do before I trade. I always think about risk. If I want to trade, whereby I have my entry right there, I have my stop loss below the swing low of this bullish bar right there. If the trade go against me right there, maybe I want to risk like 1%. And if the trade goes in my favor right there, maybe I want to have like 2% right here. And then you have to know when things are not going the right way you planned. When trends are not going, no. What dissociates professional traders from inexperienced trader is professional traders know when the right time to pull the trigger, the right time to get in and the right time to get out. When things are not working fine, they know the right time to get out fast. You have to learn how to cut your losses fast, and then you have to learn how to stick to winning trades for more profit. And then again, right here, I want to show you guys, I had a lot of confidence factors right there supporting my trade decision right there. Not only did I figure out a retest strategy, right here now is an example. Right here, we have a first retest. This is hash factor number 1. Right here, price broke a minor level right here, and the price capped a bullish engulfing bar. That is hash factor number 2. And then price broke, don't forget price broke a narrow wedge. This is a narrow wedge right here, a narrow wedge right here. This narrow wedge. Get that? So that is hash factor number 3. A narrow wedge has an implication of a bullish movement. In a narrow wedge, price breaks out, wait for retest, then go long. So this is the strategy we apply right here. And then what can you guys figure out on this chart? What can you guys figure out? I'm gonna clean all this off right here so I can zoom in. You can see right here, we had an inverse head and shoulder right here. I'm gonna make this drawing right here so you guys can figure out what I have right here. Okay. So can you guys figure out what we have right here? This is an inverse head and shoulder. After price broke this narrow bearish wedge right here, we add an inverse head and shoulder. An inverse head and shoulder, which technically it has an implication of a bullish upward rally. So that is hash confluence 4. Narrow wedge, hash confluence 3. Retest, hash confluence 2. Bullish price action of retest 2, hash 1. If I should implement my 10 and the 20 EMA right here on my trading chart, you're gonna figure out, maybe we have confluence factor 5. So right here now, I add confluence factors, 4 confluence factors supporting my trading decision on this 4-hour chart frame. So let's try and figure out if our 10 moving average actually is gonna support. I think, okay, I have the exponential right here. Okay, I'm gonna quickly set this exponential movement. Actually, I get it removed right here. So just make it to 10 and then close, and then right here, this tie right here. Okay, good. This is a 10 EMA. So, and then I'm gonna make this right here to be 20. I use a 20 on there. It's not something very difficult. You can get that stuff. I have the settings on my YouTube channel. I have a video right here. You can get access to that there. So here's the settings for the 20 and the 10 moving average. So actually, I don't use the 10 moving average for trading sometimes, but I just want to analyze an example of what I mean by confidence factor right here on my trading chart. So you guys can get a whole picture of what I'm trying to pass right here. So, okay, good. Now I'm back to the chart right now. So you guys can figure out right here what I stated earlier. I said I use the 10 and the 20 EMA for confluence factors. That is dynamic support and dynamic resistance. You can see right here now, the bullish engulfing bar right here was being rejected by what? By the 10 moving average right here. You can see that. So we have this as hash confluence factor number 5. So we can see right here now, we have 5 confluence factors supporting our trading decision right there. Those are the reason whereby our trade was able to move in a bullish rally upward right here. Okay. Price made a pullback with the 10 and 20 AMA, and then we have a massive rally upward. We trail our profit. We trail our profit. When things wasn't going right, we exit right here, and then you can see right now price is coming downward. Actually, what I'm figuring right here now, see, have high probability to continue to extend into a bullish rally for the number of factors we have right here. You can see right here the 10 and 20 AMA failed right here to support as a confidence factor, and the right here now it's crossing. So it's right here, a low right here, a high low right here, high low right here. So let's figure out what this zone right here we actually act no as a high low right here due to this minor level right here. So this is one of the ways, in fact, the ways in which you can build up confidence factors to support your trading analysis. You don't just have to put the trigger no on your chart. Don't just have to buy, don't just have to sell in luck. Luck doesn't work right here. Luck doesn't work right here. If you want to make money right here, it means you have to know what you are doing. And then if you make money right there, it means you get money away from traders who doesn't know what they are doing. And if you lose money right there, it means someone who knows better than you actually gets away your money. So I just want to remove this indicator. I just feel like trading raw price action right there. So that is it. These are the confidence factors. And then again, I want to show you guys other factors I put into consideration as well. I check fundamental. I was discussing as well with one of my new students today in the VIP member section. I was discussing about fundamental factors. These are Forex Factory, whereby you can check out fundamental factors on the chart, which in the market, which can affect your trading decision. And then we have bashcharts.com, whereby you can check out the sentimental factors in the market. That is Forex market. You can see right now the weakest currency in the market right now is Euro paired against the USD. You can see now this is the weakest currency right now in the market. This Euro paired against the USD. That is, Euro is the weakest currency. We have the Japanese yen, the second weakest currency, and then we have the New Zealand, the strongest currency. We have the Australian currency, PSR rate. And then right here, you can see we have the New Zealand, the Australian currency right here. They are twins brother. They move in direction, same direction right here. So that is it right there. So that is about market correlation and sentimental factors. So this is how you can start the odds in your favor, relate fundamental factors, sentimental factors into your technical analysis, and make sure you build more confidence factors. The more confidence factors you build into your trading decision, the more high probability, the more probability, the more chances you tend to have profitable trade. Even though if the trade is gonna move not in your favor, maybe the trade is gonna result into loss. At the end of your trading activities in a week, in a month, you're still gonna have profitable net or record. You're still gonna have net profit. Okay, so that is one of the ways you can build up confidence factors to support your trading decisions, so you start the odds in your favor. Okay, guys. So if you guys have a question, you can ask me your question. We have 10 more minutes to go. Actually, this class goes every Tuesday, Thursday, and Saturday, and it's 1 hour class. You have the opportunity to watch me from YouTube, Facebook. So if you are right there on YouTube and Facebook, you can send your question. After this class, I'm going to take my time to go through all your questions, and then I'm going to message you through the message box, send you the answers to your questions, guys. So yeah, it's Fxklex Forex Trading School. Today is your first time. Right here, we do offer free Forex trading class, and then we have premium class as well, whereby you can become a VIP members in our community, whereby I discuss more advanced courses and share my trading lectures with members in the community. And it's optional. It's not essential. It's not, I cannot put it, it's not compulsory. You can stick to the free class like you are enjoying, you are doing right now. Okay, and then if you are watching this video from a YouTube channel, do not forget to subscribe to my YouTube channel as well, and then follow. If you are viewing from Facebook Live, follow my page. Thank you so much. And then if you are in my class with this webinar, thanks so much for your attendance. I'm very, very happy. And if you have any question, anything you want me to discuss about, or if there's anything I've discussed in this class you don't seem to not understand, please put on your speaker and ask me so I can repeat myself. Okay. Hello.
Hello, Alan.
Okay. Good evening.
Good evening. This is Kate. Quite
okay, Miss Kate. Yes, it's been a long time. How are you doing?
It's not been easy.
Uh,
Quite
I
busy.
I understand your nature of work. I understand. I
I've
understand.
been off this thing for some time now.
Yeah, I understand.
Could you please repeat those five things
Confluence
to look? Yes,
confluence
please.
factor. Okay,
Yes.
okay. I'm gonna repeat.
Thank you.
Okay, welcome. So let's check this out on the currency pairs I analyzed was British pound sterling against the switch. Okay, right here on the British pound sterling against the switch, the first confluence factor right here is we add no this trend downward right here. I'm gonna use a more bold pen so you guys can figure out that. We have price fluctuation right here. You can see that whereby price is fluctuating in a bearish narrow wedge. In a bearish narrow wedge, whereby price keeps on fluctuating in bearish narrow wedge, something like this. Technically, the implication is price can have high probability to break to the upside. In fact, 70% break to the upside. Why? 30% break to the downside. And that is why we always advise use stop loss, because there isn't any system which is infallible right here. There isn't any 100% infallible system. So you make sure you don't risk more than you can afford to lose, and then have a stop loss in place. So technically, price can break to the upside. So the first confluence factor right here is price broke through this bearish narrow wedge, which has a technical implication of a bullish breakout. So that is confluence factor number one. Price broke out of a narrow wedge. So I'm gonna wipe this out so you can put that right here. Okay, let's navigate on the 1 hour because I want to show you guys the 1 hour chart. Okay, I'm gonna put this on the white screen. Okay, good. We seems to have enough. Okay, good, right? Yes. Okay. Ash conference number one. Price broke through a chart pattern, which has a bullish implication. That is ash factor number one. After the breakout, it doesn't mean you have to buy. You have to wait for a retest. And this is the breakout, this is the retest. This ash factor number two, that is retest. After a retest, it doesn't mean you have to buy. After a retest, you have to figure out price is giving you a strong bullish price action signal. You can see right here now, after the retest right here, price carved an inside bar right here. You can see that right here. For my kind of pattern of trading, I don't so much believe in inside bar. I love to trade inside bar in a strong trend for continuation of a trend. That is one of the ways I use the inside bar. If, let's say, for example, what I can figure out right here is a bullish bar or a bullish pin bar, I would have loved to take this trade right here. But due to the factor I can figure out an inside bar right here, I am not kind of, you have to have a set of rules. You need to have a set of rules. If you don't have a set of rules for you to make a breakthrough right there, it's going to be very, very difficult. So once I detected there's a retest right here and I figured out that it was an inside bar, I related this to my trading rules. My trading rules says trade inside bar according to the trend, according to the previous trend. The previous trend right there is a downward rally and price is just trying to transform. Actually, we have an inverse head and shoulder right here. We have this right here. Okay, we have the neckline right here. This is the neckline. And then we have the retest right here of this narrow channel, narrow bearish channel right here. Narrow wedge. So I have to wait for price to make a pull upward. So if I want to buy right there, take note, the next thing I act at this zone right there, which can reject you downward. Like we figure out right there, it rejects downward, and it was profitable for those who took the trade right there. But I want to figure out a price action signals that's gonna give me more confidence. When I want to trade, whenever I want to trade, I want to get into a trade whereby I have more confidence. I don't want to take a trade whereby there'll be panic. When things are not, when I take a trade and then I'm in a panic, when I'm thinking the other way, maybe things like it means I'm not following my rules. I'm not following my strategy. Whenever I take a trade, I always want to have confidence. Even if the trade goes against me, I know it's my trading rules. I followed my rules. That is discipline. Discipline. So whenever you take a trade and you keep on getting to a state whereby panic's coming, you are scared, you are afraid, things like that, it means you are doing some things wrong. Okay? It means you are not following the right process. When you follow the right process, the right rule, you have confidence. Even if it turns out to be a losing trade, you have nothing to worry about because it's your strategy, it's your rules. And this rule are giving you consistent, reliable records. Okay, so right here now we got a retest right here. This is hash confluence factor number 2. And then the next confluence factor right here is price breaks out of this swing high right here. So I'm gonna zoom more in. Okay, let's wipe this out right here. Okay, get this off, get this off, get this off right here. So we have the chart. Okay, so we know we add, I'm gonna zoom in this. Okay, so right here, okay, this is good now. So right here, we had an inverse head and shoulder. An inverse head and shoulder, technically, it's a bullish, it has bullish implication. You all know that, an inverse head and shoulder. If you don't know that, I think I sent a file on one of these my course right there on Telegram on my VIP members room. There's a PDF files right there, Japanese candlestick, stuff like that. You have the chart pattern right there. You can go through that course or ebook if you don't understand all the chart pattern. So right there, the third confluence factor right there, we can have this head and shoulder. Head and shoulder right there is the third confluence factor supporting our trading decision right here. And then price, you can see right here, we have a swing low right here. Right here was a support. Once a support level is being broken, it turns what into a resistance level. You can see right there, it's acted as a resistance right here and a support right here. You can see that level. I represented this right there with a rectangular box right there. You can see the rectangular box right there. So after price retested this region, we had a pullback, then price comes again to break it. And then price now make a retest with a bullish price action signal, which is a hash factor number 4, which is a bullish price action, which is a bullish engulfing bar, bullish engulfing bar. That is confluence factor 4. So if I should zoom in right here now on my chart, I'm gonna get this off. You can see right here now, this is a bullish engulfing bar. That is hash factor number 4. Okay. So I'm gonna zoom in back. You can see right here now, that is the hash factor number 4. And then if I should implement my EMA indicator right here, EMA indicator right here. So I'm gonna implement my EMA indicator right here. Just gonna clean all this off. Okay, I think I have to just get this back right there. Actually, I got this removed. EMA indicator, EMA indicator. Okay, good. I'm gonna get this back off right there. So I'm gonna get this. Okay. Okay, good. So if I should, I need to make some settings right here so you guys can figure out the EMA settings properly on the chart right here. I have this as 10 moving average. I think the color should be blue so you guys can figure out that properly on your chart right here, your screen. And then the 20 EMA right here, I'm gonna make this to be red, and then the period will be 20. It means I'm putting into consideration 20 days, 10 days. It all depends on the time frame. So if you are trading on daily time frame, it means you are putting into consideration 10, 20 days. If it is on the 4-hour chart, it means you are putting into consideration 4 hours. That is 4 hours times 20. Likewise, the 10. So right here, we can see, I'm going to zoom this in. Let's clean this chart right here. You can see right here now, my 10 and the 20 EMA right there. This, the blue line right there is my 10. The blue is my 10, while the red right there is my 20. You can see how they all support the bullish engulfing bar right there. They acted as dynamic support. Dynamic support. So this is the 5th confluence factor right here, supporting this rally upward. So I'm gonna get this back. Okay, so the 5th factor right here now. So I'm gonna just put this on the white screen so you guys can figure out. We have 5 factors. I have the EMA acted as dynamic support. I have the inverse head and shoulder. Inverse head and shoulder. I have the retest. I have the bullish price action signal. I have the narrow wedge. Do not mind my writing. Narrow wedge, which has a technical bullish signal. So these are the 5 confluence factors supporting my trading decision on the British pound sterling against the Swiss. We have price breaking out of a narrow wedge. We had a retest. We had a bullish price action. We had an inverse head and shoulder. We have the 10 EMA supporting no. And then we have, in fact, it is 6 confluence factors. We have retest again of minor level. 6 confluence factors. You guys can put that down. Or I can make a screenshot. I can make a screenshot of this and then send to you guys. Let's see if I can make a screenshot. Okay, I make a screenshot. I can send this to you guys in the VIP members and the free channel as well. So do not mind my writing right here. Okay, actually I can type this. Okay, I'm gonna end this. I'm gonna have to end the class soon. So let's try and type this. I can actually type this. I'm sorry for the, I'm gonna try to type this. I think yes, I can type this as well. So I want you guys to grab this. Okay, I can type this. That is #1 factor. That is, we have narrow wedge. Narrow wedge breakout. And then don't worry, I'm gonna zoom in after I'm done with the writings right there. I think I can zoom in. Should be able to get this done right now. Okay. Just want you guys to get this. Okay. So that is it. So hash factor 2. I have the what? Can someone remember me the hash factor 2? After price broke out of a narrow wedge, we add a retest. Then ask factor 3.
Head and shoulder.
Yeah, good. We add an head and shoulder. Head and shoulder, which has a bullish implication. That is inverse. Inverse. You must make sure, we have two variations of head and shoulder. We have the upward, that is the inverse head and shoulder at the extreme of a bullish trend, and then below or swing low, that is a downward bearish trend, which is the inverse head and shoulder. And then the fourth confluence factor we add right here.
Bullish engulfing.
Yeah, that is good. Bullish engulfing bar. Bullish price action. So whenever I say bullish price action, I mean bullish engulfing bar, like a bullish pin bar, stuff like that. And who can recall me the fifth confluence factor right here?
EMA.
Okay, that is a EMA. EMA serves as dynamic support. We add another confluence factor again.
Retest again.
Another retest of minor level. Second retest. Retest of minor resistance. Now turning into new what? Support. So these are the confluence factors right here. You can see it. Narrow wedge broke out. We had a retest of the narrow wedge. We had an inverse head and shoulder. We have a bullish price action. We had an EMA serves as dynamic support. We had a second retest. In fact, I can still make these to be 7 confluence factors. You guys know the 7th confluence factor? The 7th confluence factor I can figure out right here is we add change in trend, change in momentum, change in momentum, change in momentum. Okay, that is, we have a high, we had a low, now transforming into what? A high low, and then a new high low. I'm gonna show you that on the chart. So these are the 7 confluence factors we have. I'm gonna screenshot this so I can send this to you guys, so you guys can have this. Okay, done. So I'm gonna show you right there the swing high low, high low. This is the low right here. Let's make this pen very bold pen so you guys can figure out. There's a low right here, a high low, and a high low. So what I'm expecting right here now, this zone right now should act as a new high low again for a more bullish rally, which will turn into a swing trading. Okay, guys, so that is all I have for you guys. So this is all you need to know about confluence factor. I'm very, very happy for I'm very happy Mr. Emmanuel has this question. I have a lot of stuff, I want to share with you guys. The more I share the content I have, the more I gain on, the more I also refresh my knowledge. And then there is a lot, when you share your knowledge, not only your knowledge, when you share what you have with people you tend to have. If you are not willing to share out things you have, then you can't get in, So it's all about giving out, then receiving in. So I believe in that. So I'm very happy, Mr. Emmanuel asked the question, and then I believe this has really helped a lot of students in the class today. Maybe it's a morning your time, day in your time. Thanks for attending this class. So I believe you guys now, you can start implementing these confluence factors, analyzing this into your trading decision. The more confluence factors you have, the more you increase the probability of increasing your profitable trading opportunity in the market. So thanks, guys. If you have a question, if you are in the VIP members, you can shoot me your question. I'm gonna love to give answers to your question. But this class is up right now, so till next Saturday. So you can as well jot down any question you want us to treat in this class till the next class, and I'm very happy to treat all those questions, treat all those topics. So thanks, guys, and then do have a beautiful day, night rest, and then good morning, wherever you are in the part of the world. So bye.
Thank you very much.
You are welcome. You are welcome.